Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and it's your daily midday market minute. We got our rally caps on today, but before I get to it, if you're watching this from YouTube, please click the link in the corner there and subscribe. Like and subscribe. And if you're watching it from our website, there's a link below to direct you to YouTube, and you can subscribe that way. We'd love you to follow us. We'd love you to help us build our following. Let's get to it. We got our rally caps on. The markets are moving higher. The S&P now did trade 3,900, didn't get through it. Traded 3,900, and it's out above yesterday's spike high, which was major three-star resistance, 39.70 to 39.75. Sorry, 38.70 to 38.75. We spiked into that post-FOMC minutes, but it was selling into the end of the day that took us right down to that 21-day moving average. We highlighted on the Morning Express today, all of these indices were right at their 21-day moving average. We've now decisively moved above that. We need to see a firm close today, hold up at these ranges to give us some confidence going into non-farm payroll. That's right. It is non-farm payroll tomorrow that everybody's going to be watching. But first, it's yesterday's support. Yesterday's resistance really is going to be now support. You got to see the S&P hold above that 38.70 to 75. Got to see the NASDAQ hold out above 11,980 to 12,040. Got to see the Russell hold out above 1750, 1756 area. These are the levels what we got to hold out above on a closing basis here today and really through the end of the week in order to give us some momentum into next week. It's going to matter about non-farm payroll. About 275,000 jobs are expected to have been added in June. You're also seeing the wage growth number, which is going to be the bigger one. Wage growth, as it's going to be an indicator of inflation. Looking at 0.3 month over month of an increase and 5% year over year. Now, you have a lot of potentially seasonal jobs coming into play here. Will this drag down that number? Will we see this inflation indicator start to come in a little bit? That's the question. And that could be bullish because it allows the Fed to foreseeably lift their foot off the gas as we move into the fall, the autumn. So, one thing today, right now, you're seeing actually the dollar get its neck above 107 again here this afternoon on comments from St. Louis Fed President Bullard as well as Fed Governor Waller, who are pretty upbeat on the U.S. economy. Waller specifically saying he thinks a soft landing is possible. Bullard and him as well are talking about 75 basis points in July, which was really communicated yesterday. We highlighted it in our Morning Express today, but they're also talking about 50 basis points in September. But it's the upbeat prognosis of the U.S. economy relative to all those recession fears in Europe that it's going to keep underpinning the U.S. dollar. So jobs data tomorrow, at the end of the day, you really need to see this dollar come in and to help underpin a stock rally for a longer period of time. We can get days like this where the market rallies, but in order for this market to move and really cover the S&P to cover that gap up there, 40.15, 40.20, we're going to need the dollar to come back a little bit. So that as we head into tomorrow. But it's not just stocks, it's commodities too rebounding here on the week. Crude oil up just about $5. There's a lot of resistance. We have at 103, around 103 and a half, let's say. This is a trend line going back to March. We highlighted this in the Morning Express, and it got above there today, traded as high as 104.48, trading back below it right now. And overall, the headline news on the EIA report was not bullish. I mean, you got a build of more than 8 million barrels, the largest since the middle of May, and crude stayed higher. I mean, it was already moving well off yesterday's low of 95.10, and we were back above 101, 102 even before the number. I think even trading 103 before the number. And you saw a little volatility, but the market ended up staying elevated even after the number. Now, net imports picked up like 1.6 million barrels per day. That's going to drag down or be bearish because it's going to build inventories overall. And then they weren't using that, and the refinery utilization was down 0.5% week over week. So they're importing more crude. They're not refining it. What does that mean? You get a big build of crude. So I think the market digested that as maybe a short-term impact and stayed bid. So see where we settle out today, settle out in the week, but we really want to see this thing decisively above that trend line, back above, say, 104 or so. We have some other levels in the Morning Express, so go check them out. Another big mover today is natural gas, up about 10%, more than 10% on the session now. You had the natural gas report. So that same report that dragged down natural gas by a whole buck a week ago, they had I think it was a miss of about 8 billion cubic feet last week that we had a build. So it was a build above about 8 billion cubic feet. This week, a miss. It was a down below expectations by about 14 billion cubic feet. This right there is with this big move in natural gas. Freeport, LNG exporter, exports about 20% of natural gas in the U.S., and they're still out due to the fire about a month ago, and there's no real timeline on getting them back on. But they're the ones that are going to be exporting the natural gas to Europe, so that's really what's driving up those European natural gas prices. Something to think about. If they can start exporting this natural gas, means a higher demand of natural gas, and it could continue to lift prices. So that's obviously had a big impact in this down move. Keep an eye on it because natural gas did hold the 200-day moving average on the lows this week, rallying really nicely here today. Finally, the metals beaten down all week. Gold and silver got a little something going this morning, but they're giving it up as the dollar remains at 107, and you got the 10-year stretching back to 3%, a big move off of about 2.7 yesterday, back up to 3% here today, and that's weighing on gold and silver. Still, they're hanging on by a thread. We're going to settlement right now, hanging on by a thread into green territory in the session, but copper back above 350, trading as high as 358. We want to see copper finish the week of out above, say, 350, 352 area. That's the 50% retracement on the entire pandemic move, plus the pre-pandemic high in copper, 331. I highlighted that earlier this week. We bounced off support. A good finish on the week, back above 351 is a positive thing. Remember, our team is always here to help, so don't hesitate to give us a call, 312-278-0500. And remember, futures trading involves substantial risk of loss. It is not suitable for all investors.